a big down day and everybody's frightened of the market and they open down even more, you can turn around and reverse. And this is, of course, happens because everybody is short from the day before, and the people in the know, especially if they know about a big sell program, are short, and as soon as they open, they cover their shorts, and if the sell program from the day before is done, they actually go long, and then they drive the new shorts out. Whereas in a legitimate bear market that's liquidating every day, they'll often go down, they'll open up to squeeze the shorts from yesterday, and the professionals will put on more shorts again and bring the sell program back in, and you'll go right back down again. So usually these overlap type of bars, either going down to the midpoint, which would be bullish, and going up, or opening above the high yesterday and going down towards the midpoint, these usually tie in with our cycles of the 1/10 or 1/8 of the trading day. Often the top will come in at a little bit after 10 o'clock, and then they'll drift on down. If they actually hold the low at 10 o'clock, you usually can have a bullish day. That's usually the case where they may be in a strong uptrend. But these are the pivots each day where we want to look to see if they're going to reverse. If they're going to reverse down, you may open up, and this would be your 10 after 10 o'clock or even as late as 20 after 10. And then the rest of the day is down after that. That's why, as a rule of thumb, if you're bullish, never be long a market that is still going down or making new daily lows after 10:19 in the morning. Now, one consideration in looking at these reversals is this a big daily reversal that's going to last 3 or 4 days, or is it an intraday reversal? We can have an up opening at 10 o'clock and go down very sharply to the midpoint of the bar by 10:19, completing an intraday little low, and still have the market turn around and go up. Or is this part of a much bigger cycle that we want to be aware of? In other words, we can put together a checklist and look at the daily things and the bigger picture. For instance, is the measured move complete today? Have we measured all the rallies on, let's say, a 60-minute chart or a daily chart for the last 6 to 9 months and found out they average 7 or 8 days up and so many points? And is that measured move just about complete today? So if we do get a higher opening that might reverse, would that whole measured move be complete and we could go down for a measured move? Does that coincide with natural ratios or support and resistance numbers? If we have certain ratios that indicate these measured moves and we're opening at an exact number, that would be another sign. Are the number of consecutive bars in the same direction going into today's opening a measured move, or are they signs of an overbalancing? Do we find out that the correction we're seeing, instead of a 8-bar downtrend, let's say, we've suddenly seen a downtrend that's gone 10 or 11 bars? Usually when we see something like that, although you will get a little reversal and a counter trend, it means the bigger trend is turning on the market. And if the daily and weekly charts look complete, they have measured moves, they're right on the right levels, the momentum on the daily and weekly charts are such that you need more basing. So if you look at your 15-minute and 60-minute charts, do you see enough of a base or a top on those smaller time frames to justify entering a trade for a new move? Or will it take perhaps an entire day of sideways movement, building a base on these smaller frames before the daily and weekly can turn up? And finally, we want to examine, are there any cycles present? Have we squared out a number? Is our stock at 17 over 17 days from the origin? Do we have a 1-by-1 angle from a past low or high crossing the current price? Are there so many bars that we use in a number cycle, like 45 bars or 90 bars or 180 bars, and any other cycles you may use if they tie in? All these things are an indication that there may be a reversal today that's more than just an intraday reversal, but could start a reversal for 3 or 5 days or maybe even 3 weeks, and that would be significant. I'd like to return now again to the very basics of trading, because the bar chart has so many things incorporated in it that you don't need a lot of fancy things. You don't need moving averages and oscillators and angles and everything else to make a living trading if you know the basic fundamentals of reading a chart. And you should be able to practice just by taking a bunch of charts in a chart book or on your computer screen and practice reading them on different time frames. So let's go through this chart for a minute or two and look at some observations we could make about it and how we could trade it without a great deal of difficulty. This is a 15-minute E-mini, and we can see we're starting off, it's in a downtrend, lower lows, lower highs, a couple of big bar spikes in the downside. And then we identify the lowest bar, and the fact it got above it afterwards would be a buy signal. The high of the low bar is right here. And we find out if we had a horizontal line through here, basically this would be, and I guess I'll put that on there for you, this would be your buy signal area. That most of the time, as long as the market was holding above that, it would be bullish. Maybe you could have had a little plunge here and got stopped out, although that only went down to the middle of this. So if you had gone long in here and had to stop at the low, you'd be safe. But let's look what happened. The bar after the first low bar is an overlap bar. The bar after that went to the midpoint of that bar and went higher. The bar after that went down towards the midpoint of the bar and went much higher. The bar after that gave you a little tiny reversal bar and a tiny bit of a sell signal that this was the high of the move. Well, let's first look at this initial impulse wave up from the low to the high. Usually that impulse wave tells you everything about the duration of the move. So if we did a simple thing like put on some support and resistance here, we could see that until it really got above that level, it didn't go anywhere. All through here was a top. When it got above this, it started a new level. But what usually happens is it serves as a good forecasting tool. Whereas if we put our 50% on here, it would forecast that the next top may very well be over in here. And after we get to that level, if we have a little pullback, this top can be used now to forecast the next level. If we put our 50% here, it would now forecast this is the area up here where we could run into trouble. We can also, when we get up in there, we find out that we do have our high bar and we do have a little pullback, and this would be the sell of the high bar. There's not a lot of overlap, and the next day they kind of negate it. So until you really go much under this bar right in here, you're really not getting a major sell signal too much. However, you do have a little impulse wave on the downside with 3 bars, just like you did on the upside here. So what can we do with that? Well, we can take from here and put our 50% on that low. Then we can find out that right here, this first little impulse wave said, okay, if they broke that, they would most likely come down into this area. And when they got down here, if they regained it, got over here and regained the actual sell signal right here, they were probably going to go up and take out the high. So there's a lot of information we can get by doing these swings in 50% of the swings. But going back to the initial bar, after this plunging bar, we had an overlap. It was up. We had the next day was an overlap, so that's an uptrend. We had an overlap here with a pullback to the midpoint. The following day is the first kind of bearish day we had. It only got to the midpoint, and it gave a modest sell signal right here. So we do have 2 or 3 bars down. And then the day after that, there was no overlap at all. It was just a gap and run, and it took out the high from just 2 days prior, basically, or 3 days prior. And so that's a good sign. Usually, you will not have more than 3 days where you have 3 lower highs and 3 lower lows without reversing the trend permanently. So here's a case you almost had a downtrend, but it reversed immediately, turning it back into an uptrend and making this a buy signal bar. And then we can see that each of these lows is higher every day. And then now we have a higher high. We do have the high bar for the move, and usually the small little bars at the end of a big move are valid sell signals. When you violate that, you can come on down. So here we had a case where we had a lower one, a lower one, a lower one, and a series of lower ones that went 4, 5, 6 days. But they only came down to the last buy signal level. Then when they turned up again, depending on what was the exact low of this move, maybe if we define this, getting above that over here, we get a potential buy signal area from over here. Now we have a higher bottom with an overlap. Here we have a higher bottom. Nice overlap bars, higher bottom, overlap, higher bottom. They're all making higher highs and a very steep angle decline, advance. Overlap, overlap, overlap. You even, no matter where you had your stop, if you had it 2 bars back, you see on each case, you never would have been stopped out because the overlaps were very insignificant. Maybe at the high day here, if you had 2 days back, your stop would be here. So by this day, maybe your stop would be here. You're still not stopped out. But by the time you get over here, if your stop was 2 days back, your stop would have been way above the market. So it's a warning that while you could leave your stop here at the last valid level, you might just want to flush the trade and flatten out and see what happens and not trade it till it either takes out the high or breaks this low. And if it breaks this low, you may want to go short. And we notice now that the best the market can do is try and get back to the 50% of the high bar. Never really gets up there. This is the closest it got. And then it comes down again. And as soon as it violates this, is a reiteration of a secondary sell signal. This is the high. By the end of this day, certainly by this day over here, we can identify this as a sell signal here. So we could either take a little short here or violating the first sell signal right here, we definitely would go short because now we have a short on this level. We have 3 days or 3 bars in a row with lower tops. We again reiterate the first top sell signal. So there's a double sell signal right here. So now we would go short. We have some overlap, not much overlap at all here, actually down and down. Our projected target takes us down here, which is also where the last 2-day bottom was. Don't really have a buy signal yet, although the next day we can identify this as a buy signal. So perhaps we would cover a little short in here. We would also probably want to go back and look at some of our retracements in here, maybe from the last leg up. Where would that have taken us? Well, it didn't quite take us down to the 50% retracement. Maybe there was a retracement of this range. Not quite either. So this is still in no man's land. It could still get down to this area. And we count our waves. There's a 1, 2, 3, 4. It looks like there's a 5 waves developing. Could have some simple trend lines on here. Some simple trend lines coming up from the bottom. And they would kind of, where they go to this apex, usually is where the consolidation phase, and it's more of a consolidation because although it's coming down with lower tops, it's really making a big flat horizontal bottom in here. So it's an overall fairly bullish structure that after a steep angle advance and a 5 wave sideways pattern, as soon as it starts a uptrend again in here, not breaking, still a higher bottom right here, keeps making higher highs, we're probably back in an uptrend again. So there's an awful lot by examining each and every bar that we could just trade this bar by bar by bar with a trailing stop, maybe 2 bars back, and use the 50% retracements and get a lot of information out of this chart. If we move our chart forward a little bit, maybe we could move this trend line up and see that it's following this trend line up all along through here. It did break out through here and get a new top area. And we see that once we got above that level, of course, it would have been long in here anyway. And it pulls back. It finds support on here. But now you've got 1, 2, 3, 4, almost 5 bars in a row where they did break out, but they're in a tight, narrow range. And the fact that they break under the range after that, giving you the high of the low bar sell signal, this is beginning to look like it was a false breakout. And then you get a very big bar down, a wide-ranging bar where it opens here, closes at the extreme low. So there is a short somewhere in here, which would probably get stopped out on as it tries to rally back. But it rallies back to the midpoint here, then as soon as we can identify this, the high of the move again, when this bar takes out, it reiterates another sell signal,